Right now, Ghana's inflation has risen to 10.4% in March, year-on-year, and that's compared to 10% in February. Joining us on the line to give us some perspective on those numbers is Sampson Akligoh. He is head of research at the DataBank Group. Sampson, I guess the new central bank governor has a lot to deal with now that we're seeing a trend here with inflation rising for the second month in a row. Now, seems to be firmly in double digits. Your thoughts on that? Was that a surprise to the market?
No, certainly not a surprise to the market. We know that the recent adjustment in fuel prices was going to have an impact on the inflation outcome.
All right.
We see the effect diminishing after that.
Okay, and then, so how do you see monetary policy reacting to this? Like I mentioned, it does seem to be a trend now. It seemed at some point last year we were firmly in single digits, but now it seems it's the other way around. We seem to be firmly in double digits.
Oh yes, certainly the market expectation, in fact, inflation expectations for Ghana has deteriorated since the fiscal figures came out at the end of the year. You realize that the fiscal figures indicated that we have a serious fiscal overrun, and the budget deficit really for 2012 was in about 12%. And now we are also having problems on the labor front. So really, if you look at the increases and the payment of arrears in the public sector and the expected liquidity that would create, of course, in the economy, the outlook for inflation clearly shows that there's going to be a lot of pressure on domestic prices.
Do you think we'll see tightening, though?
Oh, yes, actually, interest rates from the policy side will remain at best unchanged because current interest rate levels are very high, but we could see tightening if the inflation figure actually goes out of hand because the government itself through the central bank is targeting an inflation rate below 10%.
Well, what would you describe as out of hand? It's just over 10% now. Do you think they will pull the trigger if the expectation is for it to say move to about 12%?
Oh yeah, 12% inflation would be really problematic because we have seen a single-digit figure for at least more than 2 years. What really remains a major enigma is that we are revising the inflation basket, and again, that single revision is going to change the whole outlook for inflation. So unless you get a new basket, it will be difficult for us to point how the central bank would actually respond. But when you have core inflation, which is even more important, becoming problematic because of the factors that are following inflation, especially the wage issues, the central bank would find it difficult in most cases to say that monetary policy would not be tight. All
right, so since the outlook is for inflation to continue to deteriorate, what is the impact if we continue to see tightening on the economy? Clearly, over the last few years, very solid growth figures from Ghana, but there's now a sense that if we continue to see interest rates where they are, that growth rate is under some pressure.
Oh yeah, sure. I think that yes, when you look at the interest rate environment and you look at the growth rate, you might really probably say that Ghana is growing maybe at a phenomenal rate. But from the economic side, you have to look at these other potential that we have as a country to grow. Really, optimal growth for Ghana is around 9 to 10% for the non-oil sector. So if the non-oil sector is growing around 6-7%, clearly you know that we could do better. And of course, the sectors that are leading the growth, again, like the real estate and the construction sector, really have some fundamental factors that are driving this growth. For example, we have a housing deficit in Ghana, which is quite enormous, and then we have a growing middle class. So those sectors, for example, are reflecting the basic demand and supply in the economy. We also have the hospitality industry, which of course is immune to, for example, even interest rate increases. If you still have a demographic that supports a growing middle income class, you would see that these sectors, again, would not be affected significantly by the micro economic picture that we just discussed. But the real people who are really feeling the impact is the manufacturing sector and, of course, the informal sector. largely depend on microcredit, which currently is going above 30% per annum.
All right, so a quick view on the currency. I mean, the CD has been a lot more stable this year compared to last year. Your thoughts on where it's going in the short term?
Oh yes, I think the short-term outlook is very. You're going to see the currency remain stable, especially the fact that the additional monetary policy measures that ask commercial banks to provide actually a CD cover for foreign assets continues. We could see a situation in the short term where the currency will remain stable. On the broader economy, yes, we still have issues with the fiscal and the current account deficit, but we have strong actually investor sentiment for the country, as reflected in our equity market, as reflected in foreign direct investment. So you would not, we are not going to see any vulnerability unless, of course, we have an unusual event that causes a portfolio reversal.